This quarter has been, as I said, a balanced quarter, balanced between the health crisis, the personal tragedies that many of our associates and loved ones went through, and business opportunities and future optimism that we see. So I believe that what you described is a valid summation of the 90 days gone by. And we need to be pragmatic. We need to be watchful. We need to be diligent. But we also are optimistic about the opportunities that we see and the fact that the long-term trends that we have identified and are investing on, they are continuing to gain in strength. And we are staying focused on them and shall continuously build out onto that strength areas in our core markets.
And that was the bite coming in from Rajesh Gopinath, who is the TCS MD and CEO. This is post the earnings. We spoke to them this morning. Let's bring on board our guests for today. We have Kunal Bothra as well as Vikas Sethi joining us. Good morning, Kunal, as well as Vikas. Happy Friday to both of you. Kunal, I'll come first to you. TCS has actually reported some sort of a soft Q1, if you won't want to put it that way. But what are the charts saying? Today is definitely trading flat, but how is TCS looking like on the charts compared to the peers?
Good morning, Cheryl. Good morning, Alex and everyone. TCS is one of the few IT large cap names which has been a bit of a laggard as such as compared to many of its other peers. Now, the short term as well as the medium term chart patterns are quite intriguing for TCS. What I've marked up is the patterns from the March-April lows for TCS, and as you can see that the stock has been holding on to the big major trend line, which has been supporting the stock on every kind of short-term correction. So currently as well, the stock is just about nearing this support of this major 12-month, 13-month-old trend line support. So I think that the probability of the bounce from current levels is pretty much high. To top it up, the short-term charts, like in the last 4-5 months, from the February lows of 3,050 odd for TCS, I think from there on as well, the stock has been trading in a channel kind of a pattern. So I've marked up the the two lines, the dotted lines, where you see the stock taking resistances on the upside, and almost like a parallel line where the stock is taking support at the lower end. So both of those supports coincide for TCS at the 3,100-ish kind of support zone. So I believe that till the time the stock holds on to this support and holds on to this territory, there is a strong possibility that TCS can make a comeback once again on the upside and the trend can resume. But as I said, that it's been more of a laggard because of the way in which the stock has gradually taken up its previous highs. So short-term wise, maybe the stock could come back to a support levels, but it's been an underperformer. So I would probably categorize this as a more of a low beta stock, more of a longer-term play for TCS rather than compared to many of its other peers like Infosys or Wipro, which have done reasonably well even on the short-term time frame.
Okay, so that sets the context, I think, perfectly, Kunal, for my question to Vikas. Good morning to the both of you. Vikas, a little earlier, we had Nikunj in his editor's take talk about the prospects for IT as a whole on the back of what he saw in the IT, in the results that TCS put out. And what he was thinking is, based on the results that we've seen and the expectation on how EPS is going to move, we're not going to see a major EPS upgrade in the coming couple of years. So the kind of move that you saw over the last year, the kind of rise that you saw in quite a few of these IT stocks, and in particular some of these large cap names, you're going to have a bit of trouble justifying the kind of move that they've made. So you could see time-wise correction going forward. Having said that, what do you have to say about TCS specifically? And if an investor is not bought, what should their approach be?
Good morning, Alex. Good morning, Cheryl. Now, as far as TCS results are concerned, post Accenture impressive results and guidance, the markets had built in much more optimistic outlook for the results from IT biggies like TCS, Infosys, HCLTech. And if you look at it from that point of view, the results were clearly disappointing. They missed market estimates. And that is the reason why we are witnessing a fall in the stock price of TCS. And I think this pressure could continue for a while more, meaning in the short term, we could see some more pressure on the stock. But for long-term investors, I think even at these levels or on further declines, it would be a good buying opportunity. I continue to remain bullish on the sector and TCS in particular as a stock. And this quarter's numbers were particularly dented by the degrowth which the company witnessed in the domestic market. And I think things should look forward from here, and things should look good from here. And I continue to remain bullish on the stock. However, since the quarterly results clearly missed market estimates, and since the stock had already run up in anticipation of good numbers, I think we could see some more downside in the short term, and that would be a good buying opportunity for long-term investors. And I remain confident we could see levels of 4,000 rupees on the stock in about a year's time.